if you had to pick out the one sector that did manage to stand out amidst this volatility, it was the PSB index. It has been an outperformer, and that was the only index with major gains, although the PSB index's RSI still remains in the overbought zone. But if we take a look, Nikunj, at the overall weight from the heavyweights, they clearly continue to remain on the back foot. HDFC Bank, ICICI Bank, and the likes of Reliance Industries and ITC.
See, Avan, the linear move in the market is over, and I think it was nobody surprised with the fact that we've hit what could be called as a pause button. A consolidation was overdue, and a consolidation is something which is very, very healthy. So this is something what exactly it's like saying the doctor ordered for the bulls. Where do we go here? Where do we go from here rather? My sense is that the correction is going to be shallow in nature. Two factors which are prompting me to make that kind of a view. Number one, valuations in the large cap stocks are not frothy at all. Valuations are not that frothy, and if the earnings are projected to grow in double digit with this kind of an underlying economic framework, the correction in large cap stocks is unlikely to be very large. B, right now the flows may be slightly patchy. We'll come to valuations. Let's look at flows right now. The flows have been slightly patchy, at least on the global front. But looking at the positioning of India, I guess the appetite to buy into Indian markets at lower levels, I think is going to be very large. So if you stay with this entire graphic, it's a very easy graphic to understand. For the week gone by, India fell the least and we had the least outflows. And if India falls more, I'm reasonably confident that outflows will become inflows. So reasonable valuations and appetite to buy into Indian stocks at low levels will ensure that the downside in the market, I guess, would be limited and restricted. Now, individual stocks, they will have their compulsions in terms of valuations, delivery, give and take, ownership patterns, which would be at play. But to assume that best part of the rally for the year is over and we've hit some kind of a pause immediately after we touch 20,000 on the Nifty, I think it would be naive to assume as of now.
Think of it, we're not too far away from the recent highs, right? I mean, we've corrected 2.5% only on the Nifty, and I say only because we've seen much steeper corrections after such a heady bull move. Yes, the small caps have fallen most, but that's also only 4%.
It's a pause, Aisha, and it's a pause which I think was overdue, and nobody's. I mean, it is naive to assume that markets will only keep on going higher.
Of course, yeah.
Now, are we at a turn where we've peaked out for the year 2023, or we are at what could be called as a little bit of skirmish from the top? I think the latter is at play, which is that some give and take at higher levels, I think, is the need of the hour, and that factor really would be at play. Where I think the niggling, worry is also not the right word, but the missing link in the market right now, I think, is why are banks not participating. And if banks do not participate for an extended period of time, then the market would be bereft of leadership. But I expect that banks will eventually come back. Looking at the commentary, let's say what we've got from SBI that day, Bajaj Finance fundraising exercise, the management commentaries which are coming even from smaller banks, all of them are pointing to the fact that we are in for a good festival demand, and all of them are indicating to a strong balance sheet expansion. So if that is the underlying backdrop, I doubt that banks will fall a bit more. What you need right now is that you need an engine which will propel the markets higher. We thought that banks will rotate back up, and that unfortunately has not happened.
Yeah. On a global note though, I mean, just wondering what's going to happen to flows further from here, given how, the dollar index has been moving. I mean, we're already at 105.6.
So Aisha, to be very frank, the Fed commentary, which was centered around optimism and was very hawkish, is going to have a niggling impact in the short term. See how flows move in the short term. It's an interplay between where global asset allocators, they expect rates to move, and the underlying bent of the dollar index. The dollar index is at 105. So suddenly a level of 94, 95 has become 105. And on that, Fed has already superimposed a thought that interest rate hike cycle is not over, and US economy will continue to chug along very smartly. If that narrative, so the narrative has changed, and because the narrative has changed in the near term, back and forth I think will happen. But India, in my book, is and if I speak to my friends globally and locally, the sense you come back with is that okay, India is a special situation stock and it will continue to command that premium given that right now global growth is very bereft. There are a couple of conferences which are happening in Mumbai, and I've been told that JP Diamond would be in India meeting fund managers. I know a few folks who are attending those conferences. So the India interest, I think, at its peak. And when you're showcasing the companies and the macros of India, it naturally means that at lower levels, the appetite to buy into India will come back. It could be, so this is a drawdown, and I don't think anybody should be very worried about this drawdown, so to speak.
All right, but having said that, it was certainly a tough week for the global markets, in particular for the US. You also had the fourth straight day of losses for the three major indices as we wrapped up the week on a pretty tempered note. Third straight negative weekly performance since March for each of the frontline indices. The Asian markets as well, it's looking a little bit mixed. It's inflation data that will be watched out for quite closely in Singapore as well as in Australia later this week, and Japan as well will be coming out with some inflation data. The GIFT Nifty indicative open as well for our markets in terms of what the cues we're taking for our markets is indicative of the fact that it could be a fairly tempered move. In fact, let's also take stock then of some other interesting news and updates, and I'm curious to get a Nikunj's take on this as well, because we understand that the NSE is now finalizing plans to extend their trading hours. This is for equity derivatives. So they're contemplating that there could possibly be an evening session between 6 p.m. to 9 p.m. where market participants can continue trading futures and options after the regular trading session. So this is what they're proposing, Nikunj, given the fact that they want to allow traders to react to global events sooner. It was in the month of Feb that Nikhil Kamath had tweeted saying that this could affect people's mental health and things like that. How are you reading into it?
See, I don't know about mental health. Of course, we'll have extended working hours. That for sure will change. So a lot will change, at least for us, at least in television, if this is implemented. Let's understand the spirit behind it. The spirit behind it is that, look, NSE wants to align Indian markets with perhaps what could be called as, when Indian markets are shut, and given that right now there is global volatility, NSE in a sense wants to keep the Indian market window longer, and this is in line with, let's say, what other global markets are doing. But it will not be easy to, while it will be easy to implement, and there would be a lifestyle change. And of course, brokerages will have to come up with maybe double duty, or they will have to come up with a plan where remotely things could be done. So that is something which the system will adjust to. But long trading hours means that there will be a lot of activity in the F&O market. There are a lot of companies who come out with numbers post 4 o'clock. There would be immediate reaction in the F&O market. So a lot will change in terms of the market discovery. A lot will change in terms of price action. And when one market is trading, and then if the cash market is not trading, so bulk of the market action would actually start moving there. This fantastic news if you are really looking at analyzing the market purely from the lens of GIFT Nifty. So a lot of factors are at play right now. NSE has given a proposal to SEBI. Let's see what we hear back from SEBI. While one is the core implementations in terms of infrastructure, alignment, everything that would be done. When market opening moved from 10 o'clock to 9 o'clock, nobody was happy about it. But then the system actually adjusted. So system will adjust. But is it really worth the effort?
That's the point, I think.
Is it really worth the effort? B, is the Indian market that deep enough to have this kind of an extended hour in the F&O market? And then I also worry about what will only F&O market do, which is that will definitely lead to increase in terms of trading activity, retail options, speculation, mental health. So a lot of factors are at play.
Yeah. Well, in case you're wondering, the NSE may actually mull extending the evening session all the way till 11:30 p.m. later. That's what the report suggests. But anyway, that's when it happens. The GIFT Nifty is indicating once again a quiet start for us. So let's see which way we head from there eventually.